to the Closing Beat, everybody. Happy Thursday. If we can say that anymore. Do we say Happy Thursday anymore? Or do we just hide under a little chair and shake like a puppy dog in a storm? Hey, welcome to our show. It's the Closing Beat, quick stock market update show that we do every day for you guys. We were actually trying to do a new layout and everything, and that's been postponed, as you might imagine. We're still, we've got other things to focus on at the moment. So anyways, we'll cover the stock market here today, the good, the bad, and the ugly. Of course, there's a lot of ugly to cover out there. We're also playing a game. It's called Guess the Dow. I don't know if you feel like playing or if you even want to know where the Dow's going to go, but hey, it's $100. If you can tell me where the Dow closes next week and you're the closest without going over, we'll send you a $100 gift card so you can stock up on toilet paper. I don't get that. I hear people are doing that out there. Hey, in a couple hours, we're going to do a special class for customers. 4 ways to make the most out of this market right now. What's the opportunity? And I'm just going to, give me just a second here on this one. I'm sorry for those of you that normally don't tune into this. If you're working with a financial advisor right now, a financial planner, whatever it may be, you have a contact person. And they are not helping you, they're not teaching you, they're not staying in contact with you. The class we're about to do in a couple hours, the email that we do every week, something's wrong there, right? I happened to talk to an advisor today who was literally traveling to go play golf. And I gave him a hard time for that because I'm like, well, isn't your job to be at the office? What are you doing? That's crazy, first of all. But anyways, the idea here is everybody's looking over here. When everybody's looking over here, a good magician will be doing something over here, right? So while everybody's looking at their account balances right now, watching them go down, what's the opportunity? Figure out what the opportunity is. Ask your advisor. The question right now is not to ask your advisor, should I sell? Should we change investments? Should I buy United Airlines? That's not the question. The question is, Mr. or Mrs. Advisor, I am paying you. What is the opportunity for me right now? I don't care about your family. I don't care about whatever you have going on in your life. I want to know what the opportunity for specifically me is right now. I'm going to go over 4 of those later for our customers, and I know I'm signing myself up for more work than I've ever done in my life, but that's the real value add in this space, right? When is somebody providing you an opportunity when others think there really isn't anything going on or anything they can do? There's actually 4 really good things you can do, and I don't mean go shopping to buy like a cheap stock or anything. So we're going to cover that later in the speakeasy there. I'll send out the invite in just a little bit to our customers, and feel free to join us there. If you've ever wondered if the drinks in the speakeasy are actually real, you're going to find out tonight because we're going to be sampling some drinks in there. But anyway, so that's the key. Ask, if you're used to working with an advisor or you currently do, what in the hell is my opportunity? What am I supposed to do here? Ask that question, and they better have a specific answer to you, not just some general thing, well, hang in there, pat you on the back. I hate that answer. So be sure to do that there. Don't miss this opportunity. So anyways, here we go. We have the bull market. It's officially over, right? This is a historic day where the stock market's historic bull run has come to an end. Since 2009, we've been in what's known as a bull market. That is over as of today because we did close below the lows, as I mentioned 2-3 days ago for you guys there. This happens to be the biggest one-day drop, by the way. I think you can see the numbers there. The Dow down 2,300, 260 on the S&P, 750 on the NASDAQ there. Biggest one-day drop since Black Monday, 1987. I happen to be a whole 5 years old at the time, but it's something I have studied. I really find it an interesting day in the market. Really cool story behind that. But you have to go back that far to find a day that was as bad as today. That's the bad news. The S&P, I give a little more bad news. Let's give you a little more bad news. The S&P loses 1/4 of its value now. We have lost 1/4 of the entire value of the S&P 500. That's horrible there. Who's going to be the one that bails out, by the way? Go ahead. Don't be scared. Leave a comment. Did you bail out today? Let me know, right? Somebody did. Somebody's going to bail out of this stock market. I want to know who it is. Anyways, in terms of market cap, the total value of the stock market since we hit those highs February 19th, we've lost $10 trillion, meaning the value of everybody's investments out there has fallen by $10 trillion in value in only 16 days, by the way. And what's not good news, if you like the president or you want Republicans to win, I don't get into that, but if you want that, we are back to the value of the stock market literally on the day of the election. right? So when the president took over, this was the current value of the stock market. We have retraced that entire thing. All right, overnight, we had world markets selling off there. The ECB didn't give investors what they wanted. Well, they did. I mean, they did what they were supposed to do in terms of quantitative easing over there. But the government didn't do anything. Same thing happens here. our government seem to can't get along, right? This is not the time to not get along. It's a time for all of them to be sitting on a couch in the Oval Office, smiling, saying, we've got this, don't worry, shaking hands, hey, Ms. Pelosi, you know, we're getting along, don't worry, we're going to figure this out. That's what we wanted to see today in the stock market. We didn't get it, right? It just didn't happen. Overnight, we had a press conference, or not press conference, but a Oval Office speech from President Trump there. You could tell he didn't want to be there. He had nothing good to offer. He didn't mention anything interesting. I'm not giving the man a hard time. It's just you could tell. He's like, I got nothing. I'm here. He didn't. The way he was talking was even like he wasn't interested. We had the NBA cancel their season. March Madness canceled. PGA, I think, is canceling their season. Hockey canceled their season. All across the board. Just lots of bad news. The markets actually fell on all of that. Believe it or not, the markets actually fell on the report that Tom Hanks and his wife are tested positive for the coronavirus. The stock market fell on that. So all news is bad news. The Fed. What's the Fed doing about this? The market doesn't care what the Fed's doing about it. They want the government to take action. They don't want the Fed to take action. The Fed took what was the second largest form of, we'll call it quantitative easing, second largest form ever in history, happened today and is going to happen again tomorrow. Incredible. They put $500 billion into the market today at about 1 o'clock, and then they're going to do a total of $1 trillion tomorrow. $1.5 trillion that they're putting into this, plus 60 billion more in the overnight repos, things that they're doing there. The only other time they've done more than this, which we can't actually quantify this, but the only other time that they stood up and said they were going to do more than what they've done now was in 1987 during the Black Monday, where their literal quote was, "We will provide infinite amounts of liquidity." Infinite. They said the infinite, whatever it takes, we're going to do it. That's the only other time they've done more than that. Anyways, so when they came out with that today, the stock market, let's just go over to it here. The stock market actually rallied 6% off lows. So we weren't even at these lows here, but about midday today when the Fed came out with that, we rallied 6%. We usually don't gain 6% in an entire year. And we did it in a matter of minutes. That gives you an idea of how this is not a typical market if you happen to be just tuning in for the first time. Again, the stock market wants the government to take action. They're not agreeing on anything there. The Democrats literally shot down what the Republicans came up with. The Democrats came up with something, and I heard that Donald Trump literally ripped it up. He said, no, we're not doing this at all. It's not time for that. It is not the time for that, I'm telling you. The Democrats said that the payroll tax doesn't help those without jobs. Who doesn't have a job right now? You can look at the weekly jobless claims. Did I pull those up for you? Let's go to it. Yeah, weekly jobless claims. Check it out. So put it in here on the chart. Weekly jobless claims are actually ticking lower. That tells you the number of people that are applying for assistance on a weekly basis. Now, economic numbers haven't been that much of a focus because they tend to be a quarter behind or a month behind. This is week by week. Everybody that wants a job can actually go get one. If they can't, then that tells you the unemployment number is not accurate, right? Everybody that questions that, if they're going to disagree that people don't have jobs or are losing jobs, well, the data doesn't say that. And that means if you're telling us the unemployment rate's not accurate, then what's going on, right? I know a lot of people have their own beliefs on that. Continuing jobless claims, they're actually going lower, right? So the whole idea of this whole payroll tax thing just kills me. And the stock market is responding to that. It's not my opinion. The stock market is actually responding to that. And because of that, you got a market that's sitting at lows and is actually closed just a little bit lower after hours here. So that's the bad news. Let's go through the good news here because there's actually a lot of good news going on in the stock market right now. I'll get rid of that. Analysts out there. You've got analysts cutting estimates left and right. UBS, HSBC, RBC cutting estimates, Wells Fargo, JP Morgan, Goldman Sachs, SunTrust, all cutting, well, they're not SunTrust anymore, but cutting their estimates going forward for the stock market. That's good news because if you look into that a little bit further and don't just kind of take that on the surface, if you dig into it a little bit, what they're actually doing is they're saying, we're going to put our estimates down here. They've lowered estimates to a point that's beyond the financial crisis. So essentially what they're doing is saying, this is going to be much worse than what people think. They have to, really, but anyways, so they're lowering the bar so low that when companies come out and say, yeah, it's bad, but it wasn't that bad, right? We have a recipe for a market that can actually celebrate something which is making light of the situation right now. I apologize, but that's what's actually happening with analysts right now. It's good news in the sort of short to mid-term once the earnings start coming out. So they've lowered the bars there. Number two, good news out there. Stocks are severely oversold. They're already priced in as if we have hit the bottom of a recession. And I'm not joking. I'm not just trying to make you guys feel better. They are literally oversold to that level. When stocks sell off that fast, they tend to recover quickly. We're not going back to highs. Let's get that out of our heads, right? No way we recover and go back to highs. But when stocks sell off as sharply as they have, there's a reason people get excited. There's a reason why Carl Icahn's out there who quadrupled his investment in Occidental Petroleum and probably did a whole lot more that he didn't tell us about, because stocks are so oversold, they're pricing in as if we've already hit the bottom of a recession. That's how bad it is in terms of individual stocks out there. Later tonight in our class, I'm actually going to show you, we're going to go through every recession, and I'm going to show you how the markets bottomed during a recession, because that's a backward-looking kind of stat there, to see that stock markets tend to actually rally during recession. So if we do go into a recession and this gets labeled as one, that's actually really good news there. So that's number two. Number three, this is kind of funny. If you look up the Google searches for the term, should I buy a house right now? It is off the freaking charts, right? Everybody and their mother is wondering if they should buy a house right now with low rates. What's that tell you? That means that your personal situation hasn't changed. The stock markets have fallen. Yeah, your 401k, your IRAs lost some value there, but you still see this as an opportunity. Good for you, right? So the search terms off the charts there. And by the way, I looked up one more. The search term coronavirus discount vacation. Right? People that are looking to get a deal on a trip over the summer because they're maybe not taking this seriously, or they're not as scared, or they're younger and they figure, oh, well, what if I get the virus? Who really cares? But people are actually searching for opportunity in their personal lives as well. I love it. That's awesome. Number four. I kind of mentioned it already. When we fall this fast, we bounce fast. Bottom line. How many times have I shared that with you where we say somebody will ask a question about a stock and I'll say it went too far too fast, likely will pull back. Same thing happens on the downside. Goes too far too fast, it will likely pull back. Watch what happens tomorrow. Watch what happens on Monday. Every time I share that with you, it happens. We used to give stats plays on that to actually show the statistics on how often a stock will bounce or pull back from hitting those highs. So there's a lot of good news out there in this mess. And again, the key is not to look at what's going on, but to look at what your opportunity is. I've got rental properties, you've got your 401ks, you've got your IRAs, whatever you have, what's your opportunity? I'm going to cover that tonight. I'm really excited about that one there. Anyways, let's take a look. In the Dow today, the Dow outperformed the S&P 500. It didn't fall quite as much there. After hours has fallen a little bit more. Russell 2000 is the big underperformer for the day, lost 13% on the day. In the Dow, I just kind of thought it was interesting. United Technologies, it did finish down on the day, but it seemed like one that was actually fighting. See how it closed up off of its lows? Ahead of time that it's sort of marking a bottom there. I can't make any suggestions or anything, but I just thought that was an interesting one. Wasn't the best performer out of the group. It was the one that seemed to be fighting the most. On the downside, Boeing, 18% on the day. This is the largest two-day drop ever in Boeing's history. So if you like buying into those sort of weird headlines, there's your headline right there. Largest two-day drop ever. It now accounts for 1,250 points of the Dow's 7,500 point drop from the highs. So Boeing is by far the biggest leader in terms of what's pulled the Dow down. Goldman Sachs comes in second place. It accounts for 550 points in the Dow, and Apple accounts third place, 485 points there. Disney stands out a little bit today, down 13% on the day. It is now down 40% since hitting these highs right now. 40%, nearly losing half of its value. For what? Right? Did the company have to just demolish some of their parks? Did they just no longer have good movies coming out? Are people not going to watch these movies anymore? What happened? Nothing, right? I mean, in terms of that. So 40% discount there. That stands out a little bit. Okay, in the S&P 500, you got Occidental Petroleum putting in a positive day. I think it was the only positive stock in the S&P today. It was, yeah. Only stock in the positive for the S&P today, adding about 0.75%. This is Carl Icahn. He had a 2.2% position in Occidental Petroleum. He raised it overnight to 10%. So he believes in this company. He obviously, I mean, he was a bright guy. I'm not going to pick on him or anything, but there's a guy that went shopping today. You also had UPS, did come off the lows there, finished down 2%. Was one of the, it hung in there a little bit in terms of stocks that lost today. They got a new CEO, by the way. It was a former board member, so she's really good. Everybody's really excited about the new CEO. That would have been most of the conversation today if it weren't for the markets. On the downside, well, can you guess? You've got the top 3 biggest losers in the S&P 500 are the cruise lines. Royal Caribbean down 31% overall, now down over 75% from its highs. 75%. Was there a terrorist attack? Right? Did the company file bankruptcy? What happened here? Nope. That's just what we're dealing with. Carnival Cruise Lines comes in second place, I believe. Third place, actually, 31% to the downside. And Norwegian Cruise Lines takes first place with a 35% decline today in the S&P. You also had, you had United Airlines in there. Travel ban to Europe. If you didn't see it, we're banning the travel to the EU minus the UK, I think was the only thing that got left out. Macy's, these second-tier retailers, just pummeled today. 20% down for Macy's. Can Macy's survive this? I don't know if Macy's can survive a downturn in the economy there, but that question probably come up here. And Limited Brands hitting new lows today, down 20% as well. In terms of sectors, it was one of those days again. Money came out of everything. There's no need to try to make anything interesting of that. Money came out of everywhere. Retail was your biggest loser, down 12% on the day. Naturally hitting new 52-week lows. Kroger did hold up today out of all of them in the mix, only lost 4%. It did close above its 50-day, so it remains one of the stocks still above its 50-day there, but weak. Home builders down 11% on the day, new lows, of course, as well. Hyper extended in the short term there, over 50% decline from its highs if you're playing along. You got financials down 10% on the day, very extended, of course. Down 50% as well, and transports down 50% as well from the highs as well. So if you like this sort of bigger discounts out there, I'm not sure where you stand. I'm pointing stuff out. Volatility hit its highest level since the financial crisis, a crisis that could have literally stopped the world in its tracks. Volatility has hit that high. Is it a little overblown? Yeah, the answer is yes. And let's go back over here to this chart here. Here are your changes from 52-week highs in the individual sectors, updated for today, of course. Energy, the worst performer, 55% from its 52-week highs. Financials, 35, the sector, not the ETF I was just sharing with you. Industrials, you can see in the mix there, largely just adding to the losses from yesterday. You had utilities go into bear market territory, which it was not yesterday, and you basically have healthcare and consumer staples in there as well. I point these out because some people like to buy weakness and some people like to look for what's holding up. I don't know if you call a loss of 19.54% holding up, but in this market, it's holding up, right? I mean, that's at the end of the day, that's where it's at. You have less than 2% of the S&P 500 above the 50-day moving average. That's only 9 stocks. Over 1/3 of the market lost double digits today. It doesn't happen often if you're playing along at home. You had no 52-week highs today. If there were, that would be a screaming buy, but there was no 52-week highs today. You had 336 new 52-week lows. That's a new record. Remember, on March 9th, we hit a new record with 230 new 52-week lows. Our new record is now March 12th, only just a few days later, hitting 336 new lows. The top worst performers in the 52-week lows today, those are the cruise lines: Royal Caribbean, Carnival Cruise, Norwegian Cruise Lines. Then you had airlines. You had Alaska Airlines, you had United Airlines, American Airlines in the mix there. And then a couple others that kind of held their own, I thought, in terms of hitting a new low today. First Republic, it only lost 2% on the day, so in the financial space. Lost 2%, starting to bounce back there just a little bit. Occidental Petroleum, that's the Carl Icahn news there. UPS hit 52-week lows, but I shared that with you. Already coming off the lows, looking okay, right? A little bit strong there. And Seagate Technology, also the same, only lost 1% on the day after hitting new 52-week lows. They kind of stand out. One thing I'll point out here, let's go over to the S&P index there. Goldman Sachs said yesterday, if you watched the show, I pointed out, the Goldman Sachs says the bottom of this market is about 2450. And remember yesterday, we still had a ways to go. If you look at the S&P today, the index, you've only got a couple more points to go until you hit Goldman Sachs's predicted bottom of the market. And they mentioned that this would probably happen over the summer, so that's how fast we're moving. I'm not saying that they were wrong or bad or anything, just it's an incredible drop there, to say the least. And what about you Bitcoin players out there? Remember when Bitcoin was sold to you as the idea that it would survive any sort of apocalyptic type move in the market? What happened? Huh? All of a sudden. You guys know where I stand on Bitcoin, but even Bitcoin investors are getting punished out there. There is no two ways around that. As far as earnings after hours, I believe you have Oracle reported earnings. I think they did okay there. Alta as well. Slack down over 20% on earnings there. You've got Dollar General. They beat on earnings, raised their guidance going forward. In the oil space, I mentioned this earlier in the week, you were going to have some of these energy companies either stopping some of their spending or cutting their dividends. If you look at Devon Energy, they said they're going to reduce their spending by $500 million in total. You're going to see more of that. JetBlue hit new 52-week lows today, 15% down on the day. There was a passenger that went from JFK down here in Florida, thank you, that tested positive for the COVID-19 virus there. Yeah, and that's that. That's basically what I have there. Earnings tomorrow, you got Buckle, that's a retailer. Jabil Circuit, that's in the semiconductor space. JK Solar and Overstock.com, expected to lose some money, so we'll see what happens there. Dividends, if you are a dividend player, you've got Public Storage paying out $2. United Healthcare paying out $1.08, Anthem Healthcare paying out 95 cents, T. Rowe Price 90 cents, and Iron Mountain 62 cents. We do own some of those, so at least you've got some dividends coming your way. The end of the day, what's your opportunity? That's it. That's all you care about, right? And I'm not trying to make it seem like people are heartless out there, but when you went to the store and you bought up all the toilet paper you could find, did you care if the person next to you got toilet paper, right? You didn't care. You bought the toilet paper. I don't know why you guys are buying toilet paper, but I saw that on Twitter and stuff. So at the end of the day, your finances are the same. While everything is lower, you ask the question, what's my opportunity right now? So when things do recover, and they will, how do I make my net worth grow more than if I just left everything as it is? That's the question to ask right now while everybody else is panicking and moving their own way. If you're watching us on YouTube, I'll take my chance here and try to answer some of your questions, but there are a lot of them, so I apologize if I miss them. I'll try to go through them quickly. I love it. Whoa, okay, so either this is catching up or I can't keep up with this. So we'll see. PE ratio in the S&P 500, still technically overvalued, by the way, so there's room for discounts in here. I don't know that we see it, but still that the case there. You're thinking about covering shorts tomorrow. Seems like it's risky to be exposed at this level. Ask yourself again, going into the weekend, if the government can't get anything done, if they can't work together, and next week the Senate's supposed to go on recess, then why would anybody buy the market here? Now, I happen to think that they're going to come together. They have to put their differences aside. The Fed's already working with the Treasury Secretary, yada, yada. But bottom line is, you need more stimulus. Remember during the financial crisis, I don't know how many of you are old enough to remember this, but remember we all got a check? I'm not saying I'm for that or that we should just hand out money to people, but remember when George Bush literally just sent a check to everybody? I mean, that's working together. I don't know, it didn't work, right? I mean, the market still fell. But the bottom line is, remember when they did extreme things like that? Believe it or not, that helps the stock market. That lets people know that somebody's got their back. Right now, the stock market feels like nobody's got their back, and the Fed is out of bullets. They're expected to just cut to zero, if not before next Wednesday, on Wednesday, right? So they got no more bullets. There's nothing they can do. All this talk doesn't help support the markets. We need the government to be friends. Let's go. Work together, guys. Markets always fill gaps. They will. And watch, they will for sure. Yep. Question, do you take customers outside of Florida and to provide those streams to the dojo? Yeah, we actually have customers all over the country. We have, as long as you're a U.S. citizen and you have income here in the U.S., that's the IRS's rules, not ours. We can accept any of you from any state there. Texas is one of our bigger states. California is one of our biggest states. Ohio, Michigan. But we are SEC registered, so we can do business in every state versus just being stuck here in Florida. And look, it's a tough time because a lot of people, when the markets fall, we open more accounts. We get more customers. And sometimes the answer is you don't really need us, right? Sometimes I just have to talk you off a ledge, the bottom line. And I'm not going to be one of those that sells you if I happen to talk to you. That's not my job, is to convince you to use us. Well, I mean, I guess that is my job. But the bottom line is it's got to be what's best for you. So, I mean, that's definitely the case there. And I do apologize if you email me and you're not a customer and you're asking questions. It's not that I don't want to help you. I can't. I'm legally not allowed to do that because it's called the suitability rule, by the way. Somebody asked that the other day. I can't provide specific advice to people that are not customers because it's not known whether I know if that's suitable for them or not. And the SEC has something called a suitability rule where you get in a lot of trouble if you happen to give advice. That's why I'm very careful with what I say here. Yeah. There it is. You remember the stimulus check. Yeah, I think that's what I got. Well, we were married filing jointly at the time. I think we got $1,200 or $900 or something like that. I don't remember. I just remember thinking, that's the world we live in. They're just handing out money. And me and the missus debated what to buy with it. I don't even remember what we bought with it, if we bought anything. But they literally handed out money and said, go spend it. Right? They didn't want you to save it. They said, go spend it. That's how crazy it was, and that was during a financial crisis. You know, we didn't fall this much during that financial crisis, especially in a 16-day period. Really appreciate you doing this thanks. I love having a spot for you guys where we can all chat and things like that. What sector should you be looking at right now? It depends on where you stand. That's why I shared the sector performance. Like I said, some people are contrarians and they like the idea of buying energy. Other people like the idea of buying relative strength, which is a tough word to use right now. Yeah, I mean, that just depends on where you stand. Use the chart that I shared with you there. You're in a downturn. What's the differences between buying low ETFs versus individual stocks? I really think it's a matter of the research you want to do. It is a stock pickers type environment right now, but if you don't have time for that or it makes you nervous, you could use ETFs or even mutual funds. I mean, it's not, you're not doing anything wrong by choosing one there. Yeah. Thoughts on the bearish ETFs? I don't like leveraged ETFs. Those are for overnight trades only. If you're looking at a leveraged ETF, read the prospectus. In the first couple pages, it will literally tell you, the company themselves will tell you, this is not for investing. They know because there's a lot of fees involved with those. They lose value even if the markets don't fall. So be very careful with leveraged ETFs there. Very, very careful. Yep. What's your take on the suggestions the Fed should do to stimulate the Cramer suggest? Well, the Fed is stimulating as much as they can. This is truly the second most historic thing they've ever done. They just did it today, and they're doing it tomorrow. Over $1.5 trillion. Think about that. If you have like a $50,000 IRA and you watch it go up or down $1,000, you know how you get excited or nervous or something? I get it, right? Imagine spending $1.5 trillion to not even know if something's going to work. That's incredible, man. That's incredible. You expect the bull market to have the same leadership. I think people will go back to those names first. Yep. No, I do. Your FANG names, your tech stocks. Yep. Because that's the last known place that they could go. And those stocks are obviously discounted right now as well. Yep. What 3M is like riding a bucking horse there. Well, actually, 3M has been less volatile than most stocks in its category, as well as the overall stock market. I get that it's a little bit back and forth, but that stock has actually been a lot less volatile than other stocks out there. So if you think that's a bucking horse, you might be better off with something more smoother. Yep. You expect a bit of a bounce back tomorrow. This is where, obviously, it's news sensitive, but you kind of do, don't you? I mean, you don't expect a record rally tomorrow. I'll take it, but you don't expect a record rally tomorrow if there's no news. Because who's going to want to take risk into the weekend? And I've been saying that like every Friday now because that's the kind of way it's been. But unless there's something, right, that the Senate's going to stay and they're going to work this thing out, or that they have something that they're agreeing on, we need something. If not, why would anybody say, I'll take risk into the weekend and just hope that something good happens on Monday? I think that's a tough argument to make there. We'll see. China should pay for this. Yeah, well, we'll see. Well, in the meantime, hey, historic day, right? And we've said that a couple times here, but if you're participating in this market and you're not sweating and freaking out and everything, you're doing good, right? This is not what the markets normally do. But again, Ask your advisor, get the help from your advisor. If you're one of our customers, I'll see you in a few hours, but you want to know what the opportunity is. Where do we strike? How do I improve my net worth while everybody else is freaking out looking at their balance? Again, let everybody else look over there. You figure out what you need to do and get there. And if somebody's not helping you or working with you, I'm happy to do it. I am always here and always watching. I appreciate you guys watching. And I will be back tomorrow. We'll do this all again, see how this week ends up. Have a great rest of your day, and maybe don't watch so much TV today. How about a Friends and Frasier type night where you maybe just watch some old reruns that are predictable, huh?
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.